Yeah, don't come off camera. Yeah, so quick presentation. I don't know if you guys have been through the framework, where in the framework you guys are, but this is kind of just an overview of the framework again. If you haven't gone through it yet, maybe this will entice you to do it, but if not, no worries. So yeah, what we're going to talk about today real quick is just why options market analysis matters. Why does GammaEdge even exist? Why did we create this? Problems we solve for you guys as traders and how we solve them, who GammaEdge is and isn't for, and then the tools that we ultimately have built to help solve those problems for you. Next slide. So yeah, this just hits on why option market analysis matters. We can see this chart from the OCC. Since 2020, there's been a dramatic increase in options. And not only that, but a lot of that volume has come in the near date options, 43% here in 0DT. But I think I saw a stat or whatever, a month ago that on one day, 51% of all options volume was 0DT. And with that, there comes implications on the way that the options are now a significant part of the market. With that, that's how speculators are mainly placing their trades as opposed to stocks. With that comes ramifications that GammaEdge kind of looks to take advantage of. And so the way that we do that is through our 3-pillar framework: market sentiment, market trend, market structure. So with market sentiment, what we're doing here is, again, going back to the options market, we're looking at call and put speculators, how they are positioned and how that positioning is shifting intraday and over a period of time. Michael, can you scroll down to the next slide real quick? Yeah, so as a quick side quest, just this market sentiment, just hitting on that again. We think as a market is a sine wave. The markets are driven by out of the money calls and put speculation. In our opinion, this is what we see all day, every day, driving market action. So as part of that market sentiment pillar, we were really wanting to understand where on the sine wave we are, and also in what direction of that sine wave we are moving. Now go back up to the slide before, hit on the rest of the pillars. Yeah, perfect. So then we have market trend. This isn't necessarily options market analysis that we do here, but what we do is we use something we'll hit on in a minute called the market trend model. This is based off real-time buying and selling in the market through the tick index. And what we're doing there is, we built a time series out of that to understand what the trend and momentum in the market is, both on short-term, medium-term, and long-term basis. And then kind of connecting market sentiment with market trend. If you understand what the speculators are doing in the complex, if call speculation is increasing or decreasing, same thing with put speculation, and then you understand what the trend of the market is. Ideally, if we have call speculation moving higher, we have the market trend moving higher. That right there is just powerful to know as a trader. If you don't care about anything else of the option market, that in and by itself can give you the confidence of understanding, if you're trading with or against the trend. And then lastly, market structure. Again, that is using positioning in the options market. We can understand where key levels in the structure are. So if you guys have been through the GammaEdge lab, key levels of those would be the transition zones. If we're above P-trans, that's a bullish. We're into the bullish part of the structure. We would expect to see continued call speculation, and then that results in price kind of stair-stepping higher. And then plus GEX, that's the strike with the largest gamma, natural target to the upside, all that good stuff. Is that clear so far, guys? Any questions before we move on? You can just keep it going, Mike. They can drop questions. We can get to them whenever they come. Next, keep going. Yeah, so how we solve them right there. Obviously, our tools, we're going to hit on education, which GammaEdge Lab, that's our flagship education product. If you guys have taken the time to go through it, hopefully it gets you up to speed, and you're starting to connect the dots of why what we do is important and how we do it. And then our community. Community is super important. As a trader, it's easy just to be siloed by yourself. And so, trading with a community, we're looking at the same things, chopping it up every day in the Discord. It's just super helpful to, extra set of eyes on the market for you. Yeah, Jeffrey, we'll get to that in a minute. Frankly, no idea what you're talking about with dispersion peak, but we can get to that, if you want to explain it. Well, that's cool too. So yeah, GammaEdge, we are for 0DT futures and equity swing traders. We do offer All of our tools, we say, are fractal in nature, so what can be applied on an intraday basis can be applied on a multi-day basis. And not only that, but again, because we're doing option market analysis, it's a good complement to existing trading strategies. So if you're a levels trader, understanding if there's confluence at levels with what's happening under the hood, that can be very important. And then GammaEdge is not for, if you're simply looking for entry and exit signals, like that's not what we do. We teach you to fish. We don't fish for you, although we understand that's what a lot of people like. So we do our best to help catch fish for you, but there's only so much in the time of the day. But we do our best. And then if you're a newer trader with frankly no idea like what trading is or how to go about it, we're probably not for you. The most successful traders with us are ones that have a solid understanding of what their system is, and from there they can learn to apply one topic, a bunch of different top concepts that we hit on into their trading system. And then, yeah, I mean, if your account's under 25 grand, this is not a limiter for you to be successful with GammaEdge, but again, you do fall into that pattern day trading type thing, which makes it tough. And again, like I myself, I'm a swing trader, so I do get into those multi-day positions, but again, I am sometimes in and out in a day, just depending on what the market's doing. Yep, common FAQs. Do you have to trade options directly? Absolutely not. Again, you can be a stock trader. You can use price action analysis, and then you can just layer on what the gamma tools are saying in terms of is our calls starting to dominate the structures, market trend trending higher. Okay, cool. Maybe I can press the gas with my swing trading, or maybe it's a good time to back off. Like we saw on 113, our swing model bottom intraday, and we've been trading higher and higher and higher. So that's been super powerful for swing traders. Do you have to be a day trader? No. Again, I just hit on that with the rant about swing trading. And then, if you have a 9-to-5 job, is that fine? Yes, absolutely. If you have 2 hours in the day, or you have 20 minutes in the day to prepare, it's going to take a little bit of time to just get familiar with things, but you guys should be in and out of the web app or the Discord, getting whatever information it is that you need to execute on your plan that day. So no, you do not need to be glued to the computer. I'm not glued to the computer, nor do I ever want to be glued to the computer. So perfectly fine if you're not a full-time trader. Yeah, so the tools that we use right here, this is the web app dashboard. This is our bread and butter tool right now that we are in development, greatly expand. But anyways, this is a visualization of the options market structure. So, you guys get into more detail in the GammaEdge framework course itself. We have a lot of examples of this, but just simply saying, okay, green everywhere, you can just know like that's call dominated structure. This is what we want to see, in stocks with that, we're bullish on is calls are dominant, as opposed to, Michael, scroll down to the next slide real quick. This should be obvious that this is not the same structure we just looked at. This is a put dominated structure. So again, Michael, go back up to the top and come down to the bottom. So, if you don't know like anything else, just understanding, going to the web, being like, okay, is it red or is it green? Like that's very helpful to just understand what is happening under the hood of the whatever instrument it is you're looking at to trade. And then from there, we can use the web app dashboard to understand where those key levels are, the transition zones, we automatically draw for you, and then understanding where those upside and downside strikes are being targeted in the near term and the longer term. This is the market trend model. Again, I know there's a lot of lines, but it's not hard to understand. I mean, we've written everything out here for you, and in the GammaEdge framework, we have a breadth indicator. The white bolded line, that's just your normal intraday tick that we created a time series. We have the rainbow ribbon, which is the longer term. We have a short term ribbon, and then the cyan line there, that's called the filter tick. That is what we use to understand on an intraday basis if there's significant buying or selling. That will trigger when there's plus or minus 1,000 tick readings, which is a general kind of consensus benchmark by the market that is a significant reading. So this is what a bullish state looks like. Again, just expanding lower left, upper right. Then if we'll scroll down to the next slide, you'll see what a bearish state looks like. complete opposite. That's the upper left to lower right. This is exactly what you don't want to see. So if you're a swing trader, this is very helpful to understand, okay, this is not an environment I want to be partaking in. Or, you know, if you like to get aggressive to the short side, or you kind of look like heightened volatility, this is exactly what you want to see, especially on those big days where we have those big selling days. So that is the market trend model. And then, yeah, on an intraday basis, these are our intraday charts. They're built on intraday volume analysis, what we call it, based off of what the distribution of call and put speculators throughout the session. We plot these what are called centroids, which you can just think of that as, you know, for the distribution of a 5-minute plot, where is kind of the center of activity for call and put speculation happening. And we plot that in a time series throughout the session, so we can understand what the behavior of the call and put side has been throughout the session. So, you know, in this upper left one, that has been, you know, call expansion higher, put expansion higher. The way we interpret that is, you know, calls are opening, puts are closing. You know, all this week since that rally, we've seen that put side really be aggressive to the upside, which, you know, puts have been closed all week. It kind of helped us move higher. You know, upper right, the exact opposite. We were seeing no call expansion higher, put expansion lower, kind of the opposite there. Very helpful in understanding what the characteristic of the intraday market is. And, you know, ideally we compare what is happening here with what's happening with the market trend model to, again, get confluence to make sure that we are seeing kind of a multi-tool confluence there. And then also in terms of choppy markets, again, it's good to identify trending days, but, you know, more importantly, to where if you like the chop and you like kind of doing your directional neutral trades, or, you know, if you're a swing trader, it's helpful to understand where the chop is, so you're not trying to partake in that and then get caught and then get all cut up. And then again, these are just other tools that we have in the Discord that kind of supplement the web app itself. I mean, they're just various tools. Like the bottom left just helps us understand the 4 key Greeks, that being delta, first order, then charm, gamma, and mana, where those key sensitivity points in the structure are, especially on a 0DT basis. This is a very powerful tool that we leverage throughout the session. Then upper right, this is a Gex ratio. This is just a cumulative call relative to cumulative put in the structure for whatever instrument you want to look at. I like to use this as kind of a sentiment indicator. You know, is that ratio moving higher, moving lower, you know, day over day, kind of, you know, over time, over the last month, what is it doing? Very helpful. A lot of the times we see this ratio deteriorating before price makes its moves. So that is, you know, one of the benefits there too. Michael, we're good on this slide. And then, yeah, for the equity swing traders out there, we do have scans based off of what we've been talking about earlier today, the importance of the call and the put speculation above and below spot price. We have specific scans that are looking for those stocks that are call dominated, those stocks that are put dominated. So, you know, in the universe of the thousands of stocks, we can use these scans and we can whittle it down to, you know, 10, 50 names that are those shaping up to presenting the best characteristics based off of what exactly is that you are looking for with your trading. And that is it for the short presentation. Next step, obviously, if you haven't gone through the framework, please do that. You know, it's written in plain English, a lot of examples, actual examples for you guys. If you have questions, you know, we're sending you guys daily emails as you go through that course, so you can respond to that. We've provided you guys with Zoom links if you want to book a call with us to go through anything. Then obviously, you know, we have these on a recurring basis each Friday. So if there are questions that you have as they come up, again, you can email, you can reply back to the emails we're sending to you daily, or you can, you know, jot them down and ask them during this time. So with that, that is the conclusion of the formal presentation. Michael, I gotta go, but you can take it over from here. So
yeah, sounds good.
Yeah, appreciate you guys making the time.
Thanks, Taylor. Yep. So if anybody has any questions, I'll be happy to answer. Jeffrey, back to your dispersion trade question there. I don't know if you want to unmute and talk about how you use it, or the ES obviously would not overlay specifically to what our gamma levels are. Now, we do have the SPX and we do have future traders that use SPX and look at our tools and models on the SPX that use for futures trading. But what you're talking about level on the ES wouldn't necessarily match our gamma delta level. That said, we were reaching peaks of areas midday that we were discussing with members about how we could be stalling basically due to our market trend model and some of the other changes we were seeing on that initial slide up here with is monitoring intraday volume calls versus puts. We were seeing some stalling and rate of change intraday into the afternoon. So most likely that was probably matching where you were seeing some of your dispersion peaking at, I would assume. Can't necessarily make that assumption, but I would assume that's probably, there was lots of other tools pointing to the same factors. So yeah, so be happy if you want to unmute and we can discuss it if you want.
Sure. Can you hear me?
Yeah.
Yeah, I've got a big exposure model that does futures and things. And always interested to see what the gamma levels are around those, like SPY and things like that. Was SPY peaking around midday as well on gamma?
Let me look and see here. Hold on one second.
Thanks.
Yeah. I'm gonna grab the vol m command there, Paul, and take a look at it.
Where are you at right now?
I'm in vol m channel. I'm grabbing it here. Here we go. Yeah, that's it. Yeah. Yep. Yeah. So let's see. Let me get the interactive chart. Sorry. Okay. So here is the SPY that we're looking at today, all day, and then we can look at the SPX here in a little bit. This was our end of day run. Obviously, our interactive chart. Hold on 1 second here. So roughly, we're looking around 11:30, around in here. So we'd start to go look at our slopes of our call and put centroids. And we would start to look to see if there was any change in rate of change. That would basically be market participants were changing how they were transacting. If it was continuing higher, the call centroid versus the put centroid, then if that trajectory continues for market participants, we would anticipate that SPY would continue higher. If the trajectory is starting to change with market participants and how they're transacting, then obviously we would look for some stalling type action. And we would be comparing that to our market structure from pre-market for SPX and SPY that we were already looking at. Where were the key gamma delta levels above us? Were we reaching those levels? Or how that interaction was occurring. Obviously, you see 11:30 was here, 11:20, 11:21, 11:30. We had another peak here, 12:15. But then we could not continue to take out those highs. We were bumping up against that level overhead, obviously, that we had identified. And then we start to see, obviously, the rate start to come down and change into the afternoon. So I'm not going on a limb here, but I would assume probably what you were seeing was the same thing that was happening with market participants transacting wise across the options market. Not that this is showing dispersion trade, but usually you'll see a confluence of a lot of tools all happening around the same times. So yeah, that's what I would say about that. Don't know if you want to add anything to that, Paul, but.
Yeah, we from the aspect of dispersion trades, we have a tool that allows you to run the individual really it's the dashboard of, we call it net of positioning for a given stock up or equity options into the current expiry. And you can set the dates on these things. You can do different things with them. But my point is to this is that we often do see rotations. And one of the most clear examples of this that we tracked day over day, I mean, it was very, very clear, was with the Dow Diamonds. The Mag 7 were doing what they were doing. The SPX and the SPY were trading off, and one's usually used as a hedging instrument for the other. So the SPY and the SPX kind of interchange some things, and we can go into some details about what happens there. But one thing that was very apparent was that the Dow Diamonds, either via the NetStat command that we have, we also have something called a delta balance history command. And we're able to see positioning not only right now, but we're also able to see, because options are a forward-looking tool, we're able to see positioning for deltas in the current as well as future expiries. And so this tool allows us to look, and we had a very, very clear sense that the Dow was just not participating. So while it's not exactly a dispersion trade, it was very, very clear the rotation that was occurring was very prevalent. The Dow Diamonds were not participating. In fact, they were being shorted, net shorted, using puts. So the gamma complex, the delta complex, and things were all very, very bearish for that, while the Mag 7, the individual constituents of the equities were pointed up, and or the SPY and the SPX and the Qs, certainly the Qs were very strong. Then we started getting into this week, and what did we see? We saw the Dow Diamonds, the DIA, actually changing position. And late last week, earlier this week, we were watching the deterioration in many of the instruments. So we had a very clean indication of that rotation. And again, while it's not a simultaneous dispersion trade where we're selling one and buying the other and playing the arbitrage in the middle, there is clearly an opportunity to do that if you watch certain tools. And so I would offer, Jeffrey, that there is a way to watch how the market is positioning. That's the first thing. And then the second part of that is knowing how they're positioning, and more importantly, how they're changing their positioning. You can get a sense of that rotation. You can get a sense of would a dispersion trade make sense, and which side of the dispersion trade would I want to be on? And does it have to be the SPY, the SPX, or the Qs? Can it be something else like the Dow, right? So given that, I'll leave it at that for now, but there's many ways, I think, to slice and dice the dispersion determination. And, I'd be happy to have more conversations with that as it interests you.
Anybody else have any specific questions? Be happy to answer. Questions related to the GammaEdge framework, any of our tools? Who's going to win the national championship?
Ohio State, of course. Here, well, I just went over into the SPX channel where I've got this, because we track this stuff, right? So I just want to show that this is very real.
Here, I'll stop mine. You can share yours if you want.
Sure. And I'll just wrap it up on this. All right, you should be able to see that, right? Okay.
Yep.
So this is the Dow Diamonds, and this is that tool that I was talking about. That's called the DBH, or the Delta Balance History, right? And you can create this on any of them. So one of the nice things about options. So let's contrast it with stock. Stock pricing reflects the now, doesn't reflect the future, although you can get into all sorts of esoteric arguments about, macro, micro, all that stuff. One thing about options, they do reflect possible outcomes across the board, right? So what you're looking at here is you're obviously looking at price, and then we're overlaying it with some bunch of lines here. And what the lines mean isn't necessarily, we don't have to get into the details right now, but just when they're up here, you can see price tends to move higher, and then as the lines fall, price tends to come down. And each of these lines means something, and it's in the framework. But here's what I was talking about the Dow. So we had Friday of last week, we literally had a jump up on the day of the close, and this is really important here. Why this matters is that at these price levels, you can see that we were very bearish, right? So the lower side of this is reflecting a bearish type of outcome, price pressure and things of that nature. And then you've got this kind of behavior where it's looking out again. Remember, the Dow is a weekly expiry. So the endpoints here actually point to today, right? Because they're forward looking of the expiry. And then these things out here are actually other expiries. This particular map that I'm showing here is not interactive, so I can't hover over it. But if I had the blue link on with this, where I pulled this source from, you'd be able just to hover and it would tell you the dates. Anyways, when you're talking about dispersion, you're looking for, at least the way I've done dispersion, you're looking for the index to go one direction and the constituent stocks going the other. And so you want to play that arbitrage that is afforded by those. So perhaps if the Dow is headed down, you want to look at the strongest stocks of the index and those that are going up, and you want to play that type of dispersion type of trade. So knowing this kind of behavior and knowing that the market is positioned bearish into this expiry, and then all of a sudden into the next expiry and beyond, everything is above zero. So that's more bullish than bearish. You get a sense that the Dow is actually getting a rotation, that it's actually changing state. And when you see these things change state, that gives you the opportunity. So you have two choices in a dispersion trade. So if the index is going one direction and it's going stronger, you could look at what are the weakers, what are the laggards, what are the things, and maybe I would do puts on those, and you can go into those individual stocks. You can go look at the DBH for those stocks, or whatever the case you want to do. The point here is you can set up your own dispersion trading on these individual equities using the index ETFs, and do all sorts of things. Now, I know you were interested in the ES, and I get that. We don't have futures, and we don't have a pipe for futures. It's way too expensive for what we can subscribe to. We do have lots of data pipes, and we've got a lot of coverage. Unfortunately, futures is just literally thousands of dollars a month for us to get, because we're a professional organization and we're not a private individual, and we're rebroadcasting to our users. And so we're precluded right now from getting that. All of that said, you've got the SPX data. A lot of people, as Mike said, use the ES data. There are tools within TradingView, for instance, where you can relate ES and SPX and SPY and all sorts of things. So nice things there. And then you've got this. So if you're really serious about dispersion trading, trying to get a handle on it, knowing the positioning of the options market for those equities and ETFs, which we feel are under options control, where the tail wags the dog, I think there's something that we could be offered here. So I'll leave it at that. But there's some pretty cool things that I think you can expand your Swiss Army knife of tools into, and perhaps expand your knowledge there. All right, I'll leave it at that.
Perfect. Great explanation. That's good. We'll have to clip that. That was perfect. Yeah, because I was thinking of dispersion trading as the underlying volatility between individual equities.
It can be.
Yeah.
You can do a vol. You can
Yeah.
do a collapse of vol on one side and
Yeah.
expansion of vol on others, and vol
Yeah.
cuts both ways, right? So
Yep. Yep.
there's a lot of ways to slice. I mean, vol using SVIX and other stuff, and using the underlying equities and going short
Yeah.
on one side and long on the other. There's a lot of ways to play vol in dispersion trading, right? I look at again, people, for me, people do that dispersion trading to basically just play the arbitrage on whatever the risk elements are, whether the risk element is a price element, or it could be a volatility. You're playing the collapse of one thing versus the expansion of something else. You want to pick the directionality of that. I mean, there's different ways to, and vol products will give you that exposure, and you could use the tools provided. Here's the disclaimer to everyone who's listening. Not all symbols that have options are under this tail wagging the dog scenario. If the market cap is small, if the options volume is small, sure, there's some hedging that goes on by the market maker, whoever's offering that product, but it may not move the price like you think it does. So we tend to concentrate on those things that are very liquid, those things that are very, very large, and that people use, frequently. So things with bid-ask spreads of a penny or less, 5 cents, 10 cents for equities, with volumes that are stock volumes that are up towards 1 million, and then option volumes that notional control is in the same order or even larger than the underlying stock options. We call that a dealer control metric. Those are real. Those are literally where we believe the options market is controlling the underlying market. And there's about 900 of those symbols out of all of the the 8,000 non-pink sheet BB OTC BB things that we think are relevant. So probably with way too much to drink from the fire hose on those. We also have 28 stocks and ETFs that we call the liquidity stocks. And frankly, you could restrict your universe to just those things and you'll be absolutely fine. If you can't make money with 28, you're not going to make money with 800. So it's pretty much that easy.
Yep, agreed. All right. Anybody else have any last minute quick questions? I think we covered a significant amount.
I think we did too. Sorry for being late. All right.
Oh, that's perfect. All right. Thank you, everybody, for joining. Make sure you're following us on X as we post content every day. And if you're not in the GammaEdge framework, make sure you're checking that out. Totally free education there. So sign up for that. And we also send out daily emails, abbreviated versions of our morning SPX game plan, as well as other content that is definitely helpful every day. So make sure you check that out. So, all right, everybody. Thanks. We'll see you. Thanks, Paul.
You got it, bud. Have a good weekend.
You too.
All right. We'll see you.